Hello friends, welcome to Finance MCQ. I am CA Pritam Sangwan and today we will discuss about national income and its related aggregates, which is a part of economics subject of paper 2, which is a technical syllabus of your SEBI exam journal stream. Friends, this technical syllabus is of 100 marks in phase 1 and it has 2/3 weightage in phase 2 of your SEBI grade A exam. And friends, you can find entire technical syllabus of SEBI grade A exam chapter wise, topic wise on Finance MCQ website in MCQ question format. You can visit the website and practice entire technical syllabus there. I have put the website link in the description box below. So let's begin. Friends, let's start our discussion by first understanding basic concepts of macroeconomics. So first one is domestic territory. So friends, domestic territory means political frontier of a country, and friends, domestic territory includes ships and aircrafts owned and operated by the normal residents between two or more countries, fishing vessels, oil and natural gas rigs, and floating platforms operated by a resident of a country in the international water, where they have exclusive right of operations, and embassies, consulate and military establishment of a country located abroad. So all these things will be considered in the definition of a domestic territory. And what is excluded from this domestic territory? That is embassy, consulate and military establishment of a foreign country in our country, and any international organizations like World Health Organization or United Nations Organization, etc., located within India will be excluded from the definition of this domestic territory. So let's try to understand domestic territory in a better way through an examples. The first one is Indian Embassy in United States. So tell me, is it a part of a domestic territory or not? So friends, it is a part of a domestic territory because any embassy will belongs to that particular country. And the next one is WHO office in New Delhi. Whether it will be a part of domestic territory? The answer is no, it won't be included in the domestic territory because it's an international organization. Then Indian military establishment in Afghanistan, whether it will be a domestic territory? Answer is yes, it will be part of a domestic territory. Then Reliance Industry Limited exploring oil in international waters having exclusive right of operations. So now tell me whether this will be considered a part of domestic territory. The answer is yes, it will be considered as a domestic territory. Chinese consulate in Mumbai, that is whether Chinese embassy in Mumbai will be part of a domestic territory. The answer is no, it won't be included. Like Indian embassy in United States is a part of our territory because it is Indian embassy. Same way Chinese embassy in Mumbai will be part of a China and not India. So hence not included in the domestic territory. So I hope this meaning of domestic territory is clear to all of you. Now let's move on to the next point. Now friends, let's talk about normal resident. It is also another concept in macroeconomics which required to be studied. So the normal resident refers to an individual or an institution who ordinarily resides in a country and whose center of economic interest also lies in that particular country. Now friends, here are a couple of things to notice. The first one, normal resident will include your individual as well as an institution. That is, a company can be a normal resident or any other organization can be a normal resident. It is not restricted to an individual only who resides in the country, that is who lives in the country and whose center of economic interest also lies in that particular country. Now what is this center of economic interest? Let's understand that. Friends, it implies two things. First one, lives in domestic territory. That is, he has to be in the domestic territory. We just see what is a domestic territory and carry out economic activity of earning, spending and accumulation from that location. That is, he have to carry out activity of earning, spending and saving from that location, that particular domestic territory. So that will be considered as your normal resident. And friend, what is excluded from normal resident category? Your first one is foreign tourists and visitors, because they are not normal resident, they are in that country for just couple of days. Then we will exclude foreign staff and embassies, officials, diplomats, and members of armed force of a foreign country. If any foreign staff or embassy person in a country or any armed force of a foreign country, they will be excluded from the definition of normal resident. Then employees of international organization will be excluded from normal resident category, provided if they are working for more than 1 year, then they will be treated as a normal resident. So keep this in mind. For economics purpose, if they are working for more than 1 year, they will be considered as a normal resident, even they are foreign citizen. And crew members of a foreign vessel, commercial travelers, and seasonal workers, if their stay is less than 1 year, then only they will be excluded from normal resident category, and if they are staying for more than 1 year, they will be considered as a normal resident. So remember this point. Now let's understand this normal resident concept better through some examples. First one is Indian living in Dubai for less than 1 year. Whether he will be considered as a normal resident of India? The answer is yes, he will be considered as a normal resident. Why? Because he lives in Dubai for less than 1 year. That's why he is a normal. If he is living for more than 1 year, he will not be a normal resident of India. He will be a normal resident of Dubai. Then Indian working in Facebook India office. So whether he will be a normal resident? The answer is yes, he will be a normal resident. Why? Because he is Indian, he lives in domestic territory, and he earn, spend, and save in India only. Hence, he is a normal resident. Then, American tourist in India, whether he will be a normal resident? The answer is no, he is a non-resident. Then, British working in Google office in India for more than 1 year. In this case, whether a British national will be a normal resident of India? The answer is yes. For economic purpose, he will be considered as a normal resident. Then Chinese working in United Nations office in India for more than 1 year. So whether he will be a normal resident? The answer is yes, he will be considered as a normal resident because he is living or staying in India for more than 1 year and carrying out his economic activities. So I hope this normal resident concept is also clear to all of you. Now let's move on to the next point. Now friends, let's talk about national income and its related aggregates. So first one is gross domestic product at market price. So friends, it refers to gross market value of all final goods and services produced within the domestic territory of a country during a period of 1 year. Here there are a couple of things to notice. The first one is gross market value of all final goods and services. And now what will be the gross market value? Say suppose if you purchase any item from a shop and that has a market value of rupees say 100 and you pay 100 to the shopkeeper, so that become the gross market value of that final goods. So it refers to gross market value of all final goods and services produced within the domestic territory, and we just discussed what is domestic territory of a country during a period of 1 year. That will be considered as GDP at market price. And friends, here gross means including depreciation. So here if we say using the word gross, so by default it includes the depreciation also in it. Then domestic signifies it includes goods and services produced within the domestic territory by both resident and non-resident. Say suppose if a non-resident is producing any goods and service in domestic territory, then it will also include in the domestic product. Like if a Chinese company, say Xiaomi, making mobile phones in India, though it's a foreign company, though they might be a non-resident, but whatever they are producing will be a part of GDP at market price. Then product. Here product includes only final goods and services and not the intermediate goods. Now what is this final goods and intermediate goods? Say suppose if you go to a shop and purchase a packet of milk, so for you that milk will be final goods because you will consume it. And for a dairy company, they procure the milk from farmers and then sell it to the final customers. So for dairy company, it is a intermediate goods. So just try to remember the difference between these two, that GDP will include only the final goods and not the intermediate goods. So I hope this final and intermediate goods concept is clear. Then market price includes net indirect taxes. Like say suppose in the previous example I say that you went to the shop and pay 100 rupees. That 100 rupees is inclusive of taxes, right? So here they also say that the GDP at market price will include indirect taxes. And how this indirect taxes is calculated? It is calculated as indirect tax minus any subsidy. Say if I can give you another example, the fertilizer company that they sells the pesticides and fertilizers to the farmers. So government is paying subsidies to fertilizers company so that they can keep the fertilizers rate low and farmers can get benefits of those fertilizers at cheap rate. So say suppose a bag of particular fertilizer costs rupees 300 to the farmer, but for the company it might be costing 500 rupees and 200 rupees they are getting subsidy from the government. So net price will comes out to be 300 rupees. So in the same way the market price will be 300 rupees net of any taxes, that is indirect tax minus any subsidy. So the final market price will be 300 rupees. So I hope this market price concept is also clear. So friends, this is GDP at market price. Now friends, now let's take some examples of GDP at market price. The first one is goods produced by Apple in India. Whether it will be a part of a GDP at market price? The answer is yes, it will be included because it is produced within the domestic territory. Then goods produced by Tata Motors in United Kingdom. Whether it will be part of a GDP at market price? The answer is no, it won't be included in GDP at market price. Reason being, it is not produced within domestic territory. Then goods produced by Tata Motors in India, it will be included in GDP at market price. Then goods and services produced by Indian company in Indian embassy in Pakistan. So now tell me, in this situation whether it will be part of GDP at market price? The answer is yes, it will be included in GDP at market price. Why? Because Indian embassy in Pakistan will be considered as a domestic territory of India. Then goods and service produced by a company in Chinese embassy in India. So in this case, whether it will be a part of a GDP at market price? The answer is no, it will not be included. The reason being, Chinese embassy in India is not a part of domestic territory. So in GDP, the domestic territory plays a very significant role. So try to remember that. So I hope this GDP at market price concept is clear to all of you. Now let's move on to the next point. Now friends, let's talk about GDP at factor cost. Friends, it refers to gross money value of all goods and services excluding net indirect taxes produces within the domestic territory during a period of 1 year. So in simple language, if I tell you what is GDP at factor cost, so what is this factor cost? Factor cost is your cost for producing that particular goods and services. That will be your GDP at factor cost. So it includes all the gross money value of goods and services excluding your net taxes produced within the domestic territory. And how it is calculated? It is calculated as GDP at market price minus net indirect taxes. So remember, in GDP at market price we talked that it includes net indirect taxes. Here if you subtract from GDP at market price net indirect taxes, we will get GDP at factor cost. And friends, a net indirect tax is calculated as net indirect taxes minus subsidies, that we already discussed in previous slide. And friends, now let's talk about NDP at market price and NDP at factor cost. NDP stands for net domestic product at market price, and it is calculated as GDP minus depreciation. So if you subtract depreciation from the gross value, we will get the net value. In the same concept, if we subtract depreciation from GDP at market price, we will get net domestic product at market price. And NDP at factor cost is net domestic product at factor cost. And how it is calculated? It is calculated as GDP minus indirect taxes minus depreciation. So first, what we did, from the gross domestic product at market price, we subtract net indirect taxes. By doing that, we get GDP at factor cost, and from that we subtract depreciation, so we get net domestic product at factor cost. And friends, here one important thing is that net domestic product at factor cost is also known as domestic income. So do remember this point, very important. It can be asked, what does domestic income means? So it is net domestic product at factor cost. So I hope this NDP at market price and NDP at factor cost concept is clear to all of you. Now let's move on to the next point. Now friends, let's talk about gross national product at market price and gross national product at factor cost. So friends, GNP at market price refers to gross market value of all goods and services produced by the normal resident of a country during a period of 1 year. So here it is different from GDP. Here we are talking about the national product, hence the stress is more given to the goods and service produced by the normal resident. In the GDP case, our focus was on domestic territory. Here the focus is on normal resident. And friends, GNP at market price is calculated as GDP at market price plus net factor income from abroad. Friends, net factor income from abroad basically has two concepts. The first one is factor income from abroad, which means income earned by a normal resident of a country from the rest of the world in form of wages and salaries, rent, interest, dividend and retained earnings, etc. And second component is factor income paid to normal resident of other countries for their factor services within economic territory. Example, salary paid to US national in Google office in India is factor income paid abroad. So to calculate gross national product at market price, what we have to do, we have to add net factor income from abroad. That is what we receive from abroad and what we pay to abroad. We have to net it out and we have to add that to gross domestic product at market price. So I hope this gross national product at market price is clear. Then we have gross national product at factor cost. Friends, it refers to gross money value of all goods and service produced by the normal resident of a country during a period of 1 year. And how it is calculated? It is calculated as gross national product at market price minus net indirect taxes. And we already discussed how net indirect taxes is calculated. It is calculated as indirect taxes minus subsidies. Remember that fertilizers example. So I hope these two concepts is clear. Now let's move on to the next point. Now friends, let's talk about net national product at market price and net national product at factor cost. So friends, this net national product at market price is calculated as gross national product at market price minus depreciation. So same funda what we applied in NDP concept, that if you subtract depreciation from the gross value, we will get the net value. So here in this case, if we subtract depreciation from gross national product at market price, we will get net national product at market price. And the another one is net national product at factor cost. In this case, if we subtract net indirect taxes and depreciation from gross national product at market price, we will get NNP at factor cost. And friends, this net national product at factor cost is also known as national income. This is very important, that in question if they ask you what is national income, so your national income is net national product at factor cost. So do remember this point, it is very important. So I hope this both net national product at market price and at factor cost is clear. Friends, today we have discussed about meaning of domestic territory and normal resident. Then we discuss about GDP at market price and GDP at factor cost. Friends, we also talk about NDP at market price and NDP at factor cost, and this NDP net domestic product is also known as our domestic income. Then we talk about GNP at market price and GNP at factor cost, and then we also discuss the formula of net national product at market price and net national product at factor cost, which is also known as national income. So friends, with this I try to cover all the important points related to a national income and how it is calculated, which may be relevant for your SEBI exam point of view. Friends, for more practice of this topic in MCQ format, I request you to please visit Finance MCQ website. It has entire SEBI graded technical syllabus, which is paper 2 of journal stream in MCQ format. It has 2000 plus subject wise, topic wise MCQ questions to practice. We have added explanations for correct answers wherever required. It also has 25 test series for your technical syllabus to practice. So friends, there is lot of study materials to practice on Finance MCQ. Do visit the website for more practice and increase your selection chances. Friends, website link is in the description box below. I will come up with new video. Till then, take care and thank you so much for watching.